Good evening, everyone, and welcome to today's session of After Hours with William O'Neill India, dated November 4, 2022. I hope everyone's doing well. And before we go ahead with the session, I would like to give a small disclaimer that any security or stock that you might discuss in today's session should not be considered as a buy or sell recommendation, and we'll be just doing it for educational purpose. So as we dive into Nifty 50's today action, those who have been following us on the morning mailer as well, and have understood that probably Nifty had a very muted opening. If you look at it, Nifty had a very muted opening today, and post that muted opening, Nifty was unable to hold its high for the last 3 to 4 days, and with a similar kind of action today as well. Nifty went down and made an intraday low of around 18017, and post that tried to kind of consolidate around very similar levels between 18020 to 18060. That is a very small narrow range of 40 points. However, in the last 1 hour of the trading session, you could see that Nifty rallied very sharply and retook its recent rally high of 18100. That was like very important, because earlier during the week also we had mentioned that Nifty had reclaimed that recent high of 18100 and closed above the recent high of 18100. And after that, we were able to probably switch on the buy switch. And what does this mean is that market is still in rally attempt, but we are allowed to add stocks to our portfolio as the recent rally high has been retaken. This shows that the market has significantly advanced, but we will wait for a follow through day, or probably Nifty to reclaim its 52-week high, or Sensex to reclaim its 52-week high, to take the markets to a confirmed uptrend. As we were discussing in the last slide itself, market is still in RA, right? So from RA to confirmed uptrend, what we need is an FTD, right? So those who have been following us know that, from taking a market status from RA to confirmed uptrend, we need an FTD, but there is an alternate rule as well. So FTD is the primary rule, but if an FTD doesn't occur, right, and market reclaims its 52-week high, that is in the case of Nifty's, it's around 18351, and for Sensex, it's around 61,450. Okay, so if any of these two levels get probably reclaimed in the coming week, we will shift the market status to a confirmed uptrend. If we get a follow through day, well and good. That is probably the best sign of the market, because across the globe in the last 100 years of study at William O'Neill, considering 25 developed markets and 25 emerging markets, no rally across the globe, across the time, has ever started without a follow through day. So yes, follow through day becomes the primary rule. And what's good in the Indian market is that in the last few months, the outperformance has sustained compared to the global markets, and very few follow through days have failed as well. And compared to the US markets, where around 5 to 6 follow through days have failed across the indices. So yes, if a follow through day comes, or if Nifty reclaims the 18350 levels, and there can be some kind of relief rally going forward as well. Talking about the top gainers and the losers for the day, the top gainers were mainly from the metal indices. The metal index gained around 4.1%, more than 4% for the day. So your Tata Steel, your JSW Steel, your Hindalco, all of them from the metal indices gained higher. Even the Adani Enterprises, which gained around 6.7%, Hindalco by 4.8%. The other notable gainers were Bajaj Finserv, 4.5%, Adani Ports by around 3%. Talking about the top losers, Hero Motoco was a top loser at around 1.8%. Dr. Reddy, Cipla, and Divi's Lab from the pharma group even declined as a pack around by around 1.5, 1.5%, and 1%. Talking about the key indices that gained and lost for the day, it was kind of a mixed bag, but there was this one star index that was probably holding out. If one can see is uh, the Nifty metal. In the earlier slide, also when we discussed around 3 to 4 stocks in the top gainers for Nifty, like even from the top 10 stocks were from the Nifty metal indices. The other notable gainers were the PSU Bank, which is kind of even performed well during the week, and Nifty Media as well. The indices that didn't do well were the Nifty Pharma, as we saw that around 3 stocks from the top 10 losers in Nifty was from Pharma, and similarly IT remained a drag, and you can see some profit booking in the Nifty FMCG as well. Talking about key gainers and losers, the result season is still in place, and Go Fashion, your reported its result, the Q2 FY23 revenue increased 47.9%. EBITDA increased 32.8%, but there was a sharp contraction in EBITDA margins by 760 pips to 66.9%. PAT increased by 3.8% YOY. InfiBeam also presented its result where the revenue increased by 53.2% YOY, EBITDA increased by 14.7% YOY. Again, there was a contraction on EBITDA margins as EBITDA margins contracted by around 280 pips YOY, and PAT increased by 120% YOY. Out of the three, Polymed result was the best, and the Q2 FY23 revenue increased 23% YOY. EBITDA increased 26.9% YOY, and as you can see, EBITDA margins for the company also expanded by 70 pips YOY to 23.5%. PAT increased by 14% YOY. On the other hand, Lupin received a tentative approval from the US FDA for drospirenone tablets. Talking about the global macro, probably there's a good amount of there can be volatility in the evening, that is in the US session as well. As you can see, an important data point, that is the non-farm payroll data and the unemployment rate data is expected to be announced today by the US at 6 p.m. India time. The previous data at around 263,000, and the current the expected data is around 197k, and similarly unemployment rate is expected to inch 0.1% higher as well. So talking about the chart of the day for today is Apollo Tyres. Before we go ahead in terms of discussing about how it fared in terms of is how it's faring in terms of the business model and the financial prospects and the technical criteria, I would like to give a small disclaimer that it's not a buy or sell recommendation at the moment, and we are just doing it for educational purpose. So domestically, if we talk about over the period of FY20 to 24, Apollo Tyres is also expected to benefit from cyclical upswing, as we know, in the CV space, and double-digit growth in the PV domain, as the need for personal mobility is expected to increase by greater consumer preference for SUVs, as we all noting from the monthly figures across the OEM sales, is that the SUV sales is increasing well. So media reports suggest that around 10 plus lakh units of pending order backlog in the PV domain, thereby suggesting longevity of growth for the company. Key drivers for the company will be healthy recovery in the domestic as well as in the Euro space, and the company can CAGR by around 11.2% in sales from FY20 to 24. The company also targets to achieve a revenue of $5 billion by FY26, which is an optimistic target for the company. EBITDA margin of at least 15% and ROC of 12 to 15%, and net debt to EBITDA of less than 2x for the company. Overall, if we talk about the capex spends and the free cash flow generation has been very positive for the company as well, and they've been continuously reducing debt and improving their return ratios in the last couple of years, and similarly, it's been expected to go around in the next couple of years as well. So now coming to the O'Neill parameters and your technical front, it's forming a stage to cup base, as you can see, and the stock is around 5% to the pivot. I mean, if you can see, the stock during the declining phase declined on low volumes and it gained on above average volumes. From now, probably need huge spikes in volume and probably to break out on above average volume. Overall, the RS line has been trending higher, current kind of flattish during the base formation, but yes, there is some 5% at the moment, and probably if the RS line picks up from here, then it can be a good sign. Talking about the number of fund holding, you can see the number of fund holding for the stocks have improved as well. And if you talk about on the estimate front for the 23 and 24, there is huge jump in the estimates. If you can see, for 22 EPS was around 4.1 and 23 is 13.15 per share, and 24 at 19.1. As you can see, it is expected to multifold by around 3x in your 23, and by around again by 44 for 45% in your 24 as well, according to your analyst estimates or the street estimates, if you talk about it. And similarly, the master score and the EPS rating, everything, the your buyer demand is also very strong at A minus. Price strength is good at 76. So everything at this moment is probably ticking well for the company. What's probably left is just a very strong breakout. And as you know, as we all know, that the buy switch is on, where your Nifty is reclaimed the 18,100 level. So the stock can be kept on the radar, and if probably it breaks out on the above average volume, uh, the potential buyers can have a look at the stock as well. So thank you, and that's it from my side. And stay tuned to the space of After Hours with William O'Neill India at 4:30 p.m. sharp from Monday to Friday, and the pre-bell space as well at 8:45 a.m. sharp. Thank you.